What has Warren Buffett and his team at Berkshire Hathaway been up to? What have they been buying and selling? They just reported their fourth quarter 2021 investment updates. You can see what's in their portfolio, what have they been buying and selling. We're going to talk all about that and more, as well as analyzing the thought process of what went into going into those buying and selling decisions. If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and so let's dive right in to understand what's going on with Warren Buffett, Berkshire Hathaway's investment portfolio. And so, first of all, you can go to whalewisdom.com, type in Berkshire Hathaway, or search, go on Google to look for it. And so you start scrolling down, you look at the top positions, and you quickly see, look, there's a whole lot of no changes going on with the top positions. And that in and of itself tells you a lot. The first largest position is Apple, which a lot of folks already know. I already did a video on it calling out how, it's interesting, but maybe the valuation's a bit rich, so you might want to check out that video. And not surprising, if I'm calling out that the valuation's not, kind of rich and not super compelling, not surprising to see that he's not buying significantly, looking at that. And broadly, you look at these top positions and you're largely seeing no change. And so that in and of itself is a data point for investors to consider. So here it is. You have a very top-heavy portfolio, significantly concentrated in the top names. With Apple, for example, over several hundred, nearly $200 billion position, $160 billion market value, and so based on Whale Wisdom. And so, you're looking at that, you see no change. What's that mean? So this does fit into a couple of different things. One is that when there's nothing to do nothing, that aspect. But it also does reflect that he's not buying or finding crazy opportunities. A lot of it's just sort of sitting tight, and that's the traditional value, approach that he has, which is that even if things get richly expensive, from a full valuation perspective, he doesn't necessarily sell it because he's looking to partner with them for long periods of time. And he may recognize that there will be periods of even underperformance for some of these companies, even if they are fully valued. And, the case example is how he owned Coca-Cola, through the late 90s when it traded at a really exorbitant multiple, but he still didn't sell his shares, partly because of the partnership, and he thinks of it as long-term ownership. And so that is something to consider, is that, okay, so it's not like he's backing up the truck on anything here. And the fact that his portfolio is so heavily concentrated, and the reality is that Berkshire is still generating tens of billions of dollars in free cash flow, does lead me to believe that he's probably looking at either building his cash balances or potentially buying back stock. But given that the fact that Berkshire Hathaway stock has done really well in the last few months, I suspect that you're going to see when the financials come out that the cash balance at Berkshire has been building up. So that alone is another data point for you to consider, which is that here it is, arguably one of the greatest investors in the world, probably building up his cash balances, not adding really to his top positions. Let's go into to see what's going on with sort of the rest of his portfolio. And so you scroll down a little bit, you see that Chevron is the one of the top positions, but still relative to something like Apple, which is nearly $160 billion. Chevron's a little under $5 billion, $4.5 billion, around 1%, they're saying, of the portfolio. That was something they increased by about 30%. But still, that isn't crazy, compelling. $4 billion isn't a huge bet for them. And it does reflect, maybe this is a bet on energy prices potentially moving higher. Chevron stock has, performed well recently. It's interesting to note, you've seen a couple of, once again, bunch of no changes. It's interesting to see what he has started trimming. You see Kroger, for example, the U.S. grocery chain, and that in and of itself trimming, it's not significant. I mean, I could speculate on why he trimmed. One, I personally wouldn't own it because it's not unrivaled. My goal is to own companies that I believe are unrivaled or likely to continue compounding at good rates going forward. It's a good chance that he didn't buy Kroger himself. It's only, it looks like under $3 billion position. So looking at that, good chance it's either, Todd Combe or Ted Weschler that bought two of his investment lieutenants. And I think, part of the reason why you might see him sell it, or you might just see general pressure with a company like Kroger, is one, with inflation. Two, you have political aspects, and that might sound surprising to you, but there were politicians that recently were tweeting about, oh, these grocery chains are price gouging, and it just reflects how disconnected many of the politicians are from reality, which is that these grocery chains operate at very, very thin margins, but it could become a political football because at the end of the day, everyone needs to eat. And so, you might lose going to the restaurant in a downturn, or because of inflation, people don't go to, said restaurants because things are now pricier. So you're still going to have to go to your grocery chain to buy some food. And here it is, seeing that pricing pressure means that there might be pushback on their own margins, like they won't be able to raise prices fast enough, or they might not raise prices, fast, just to, deal with some sort of political pressure. That, keep in mind, this is just sort of posturing and thinking. I don't have a strong view on it. Once again, I haven't spent a lot of time looking at Kroger, just because I look at it and I go, wow, there's so many different grocery options out there. Like Trader Joe's is just amazing, and you got Whole Foods and a bunch of others. And so I look at that and I go, it's tough looking at something like that. No real opinion on what's going on with Charter, which is kind of interesting, seeing that they trimmed it. Once again, relatively small stakes. And, at the end of the day, looking at this, you realize a lot of these things just aren't going to move the needle for them. Relatively small buy and selling decisions. They bought a little bit more of Sirius, Liberty Sirius complex. I did a previous video on Nubank, talked about how they're unrivaled. Berkshire Hathaway was one of the backers. So it's interesting to see that. The stock is down a little bit from the IPO, so maybe it means it's time to revisit this. Not buying and selling, not having a dramatic change looking at this. Interesting to see a stake in Activision. Now, they were buying on the recent weakness. This was probably Ted or Todd that was buying it. In full disclosure, I actually bought Activision as well. In full disclosure, I've recently purchased Activision. Well, it's not a crazy position, but I did a whole separate video on that before I bought it, sort of talking about the opportunity there. So check that video out if you're interested, because I think that does sort of reflect an asymmetric risk reward and why I like Activision stock personally right now. Wouldn't surprise me though if Berkshire's selling it right now, because you have this Microsoft deal in place, I think, for $95 a share, and it trades significantly below that. So arguably, you're looking at a lot of, tiny positions here, not that significant, that really don't move the needle. You maybe have Ted and Todd, buying something, moving it around the margin, but nothing that really, strikes me as crazy. Like, oh my goodness, investors really have to take a look. I mean, here, let me show you a few other small tweaks that they did. You can see a couple of different healthcare names that they trimmed. Interestingly, I've covered Stone Co. a couple of times in a few videos. This, Latin American payments business and fintech business, and it's just gone absolutely slaughtered. It's interesting to see that they still own it. They still own about 4% of the company, haven't sold any of the stock. It's gotten beaten up so significantly. So that might be, a good, interesting area to look into, checking this out. But still, I'm not looking at anything here going, holy smokes, they've just gone and made some major bets. Seeing this really does make me think, okay, looking at what's going on with Berkshire Hathaway, they're probably building their cash balances, still not seeing crazy bargains. And that's worthwhile for you to consider as you manage your own cash balances. Okay, how much cash do I want to have? Why are they holding up these cash balances? Oh, is it, or why aren't they buying? Does that reflect that we're probably in a pricier environment? Does that mean, maybe I should sit back with a little bit more cash and sort of wait for better bargains as well? So it does sort of encourage that sort of thought process. If you see anything that's going on with Berkshire's holdings, definitely, open to hearing your comments. So leave a comment below. And if you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.